Alright, boys. So, Friday we didn't get the pullback. I mean, we did on dollar yen, and that was great because I got a little bit of that at the 109 95-ish level. But it wasn't the pullback I was looking for. In fact, we got bought back up really quickly to fresh highs. Didn't really take out what I call weak longs. So it's not like I'm not bullish. I'm very bullish on the US dollar. I just think it's overdone, and I'm waiting for pullbacks. Now, I want these stops to be cleaned out, okay, from the previous low, and that would have all the trailing stops from the previous rally cleaned out, and then I'd like to buy into that sort of more substantive pullback. Now, it may not happen. And if you're watching this in the pre-market just then, pre-stream, what we saw was I was adjusting all my entries on all my limit orders to more appropriate levels. Basically, the market hasn't had a significant pullback, so I'll raise it up to what I believe I'll be happy to enter in while I'm sleeping. So around about 120 pips lower. Now, can this happen without a catalyst? Yeah, but usually we do get a catalyst. Do we have a catalyst yet? Not really. Profit taking only so far. So unless there is a catalyst that appears, it could be in the form of the bond market, could be in the form of a comment or just some sort of new report or suggestion from a Fed official or something that the market can latch on and blame for the short squeeze in the euro or the pairing back of longs in the US dollar, then it is unlikely that we get filled on these entries. These are sort of tactical plays where the market takes out stops from previous levels and then continues on for a couple more pips just as it's looking for liquidity, and that's the sort of trade I'm looking for. Alright, so where there's going to be bunched up support. And then I'm happy to get in and see how long, see how this US dollar rally can continue. So I suspect we're going to have that at some point this week. Now, if the market rallies again today without a pullback, then I'll raise it up, right? And I'll raise it up to be filled underneath whatever, if this is low, right? And the market goes to 111.50, then I'll raise up my entry another 100 points to be filled on that pullback of like 200 points. So I'm looking for that sort of move. One pair where I didn't raise the market, the level that much was the Aussie. Aussie's got some really serious trouble. And I don't know, I'll be happy to enter in. Not at 74.20, but at 73.90, I'd be happy to get into the market there if we get an opportunity today. The other trade is dollar Swiss. Dollar Swiss is more of just a byproduct of what euro is doing, and dollar Swiss are raised up to above the key support, which is going to be above parity, just about 1.0020. So I'm happy to get in there if I'm sleeping, and look, it could be a major news announcement that would be negative, but I don't think we're going to get that. So, this is the way I'm trying to play it. The two trades I still have running, I still like. Euro Swiss in particular has no business being down here. Now, look, this has got a little bit of a time factor on it. If we can't get, significantly higher soon, then I will be taking profit on this Euro Swiss. I don't want to be around here going into the Italian referendum. That's only 2 weeks away. And I don't want to be around here later if stocks start to fall, and they could do that any day. So I don't really want to be pressing my luck on this Euro Swiss. I'd be happy now to get out at just below the previous. Well, okay. At the lower end of 109, so 108 range. Might actually probably close out 107.50, 107.60 if I don't like the price action. So I might cut and run on that particular pair. The pound Aussie, I'm going to give a little bit more time. I think the pound is going to do well if there is any sort of relief rally. I think the Aussie is going to struggle. And just generally, the Aussie is under so much pressure that this pair's got substantial room to move. I mean, look, it's not the safest trade. We got in a little bit late, remember? But we will see how it pans out. Yeah, I'm actually going to move my stop to entry here. I think that's if we get stopped out, that's fine. live to fight another day with the capital. Tony should be a market maker. Yeah, I mean, you can give me all your monies as we take your stops, right? I mean, look, encourage traders. I think that's the video again causing a bit of issues, so I'm just going to leave that off. You don't need to see me anyway. Yeah, I mean, it's just so traders naturally put their stops in the wrong places, and they're frequently getting stopped out 10 pips below the previous low, thinking, why did I get stopped out there? It's just, markets are really, that sweet that they're just going to always be dipping higher than the previous lows. It's just natural to take a little plunge, and maybe this was actually a bit ambitious. I would actually love to be entered, anywhere below in this. I want to get filled, right? I just don't want to be too early. I mean, the market's just caught long on any pullback here. It's nothing personal. And you can't expect a rally of 900 pips and not have a pullback of 200 at some point, whether it's from 112 to 110 or 111.20 down to a 109.20. It's still very, very likely. And so week longs is something I talk about every now and again, or week shorts, and they're just people who are late to the party, and the market eats that stuff up. I just hope we actually get the extension today, because we've been talking about this extension for a while now. Markets had the most shallowest pullbacks, and if this is it for today, then it's going to be so disappointing. I suspect though, the market will make a reason up to have another go, a little bit lower, and then people will get a little bit bearish and start talking about the uptrend being over. That's the sort of stuff you want to hear. Now, when you're seeing the US dollar pull back like this, what do you think's happening in the US yields? Okay, so the US yields are obviously starting to fall because the bonds are starting to rally. So keeping an eye on the bond markets is very important here. If we can break that back into 126 again, this is key coming up. This is very key coming up. If we can break into that, that would give us the opportunity to see a significant US dollar move, and that's what the market will blame it on. Profit taking in the bonds. Literally, I'll be reading that reports tomorrow if that's what happens here. But let's just see what happens first. We don't want to be too aggressive here. So I'm not advocating selling the US dollar. That's not my trade here. That's just the we're looking for it to sell off, and then we're going to buy it back later. Alright, so the most talked about pair for me and my clients has been the Aussie. So many people have been caught here as the market is broken down. Let's just have a little closer look at it, okay? Brexit low here, 73. So let's tag it in, Brexit low. Range low. Yeah, range high. Market is been trading between that nicely for 4 months. We break down, obviously there's going to be stops below it, but the story behind this sell-off is very, very negative. Let's have a look here if we can see it. It was summarized really well in a post from HSBC. The The US dollar is likely to strengthen as the market tries to price in a more expansionary US fiscal policy alongside a tighter US monetary policy. The AUD should be vulnerable to this US dollar strength. The capital inflows it needs to fund its current account deficit could be constrained in a world of high US rates. The AUD's rate differential over the US dollar has been under pressure and could continue, and this could continue as it's highly unlikely the RBA would move away from a more hawkish stance. Indeed, the RBA is happy to see the Aussie dollar fall, and would help continue this process, as this would help the process of domestic economic rebalancing. The AUD will also face contagion fears and any rising risk of US-China trade war. So right now, the market's falling without the trade war, right? So they're talking about how the Aussie's under pressure before that even happens. While stocks are strong, while oil's strong, Aussie's under pressure. Okay, that's extremely negative. Before the negatives even begin, the Aussie's broken down range. And now imagine if something happens between the US and China. Aussie will be the first hit. Alright, imagine if something happens in the stock market because the emerging markets are collapsing. Aussie would be one of the biggest hit. It's a risk currency and it's getting crushed in a risk on environment. Wow. It's ultra negative price action. The most negative I've ever seen in the last couple of years. Right now, while this ultimately may not materialize, the market is pricing greater risk of such a destabilizing turn of events. They're talking about the US-China trade war. This is from HSBC. This is pushing US renminbi higher, and the Aussie dollar will be vulnerable to this given the close trade links with China. Aussie has broken through the support offered by the 200-day moving average, which is just above 75, and the previous support. Okay, the range support at 74.50. Alright, so they're targeting a retest here of the lows, 68.30. Alright, so they think this is the most likely path going forward. I mean, I sort of see it. I think the risk of that China-US trade spat in some form, whether real or unreal, is going to be ultra negative. Okay? So, yeah, I understand this selling, and I'm more eager to sell Aussie on rallies than most of the other pairs out there. I'm eager to buy dollar yen, and I'm eager to sell Aussie US. In fact, I'm probably more eager to sell Aussie US than I am to buy dollar yen. Dollar yen is susceptible to a stock market correction. Dollar yen is susceptible to the emerging markets stock sell-off fear jumping across into the developed markets, right? Whereas and straight just raising rates in the US may lead to some stock market correction. So Aussie dollar will go down in that scenario anyway, right? Whereas dollar yen might not go up if the US dollar is really strong, because it is a safe haven. Yeah, I see that steady, but I think I see that same resistance zone. I don't think we're going to get there though, mate. I think there's enough people that know how negative this is, and you are going to see that roll over earlier than 74.40 on any sort of relief rally. But let's just see. I haven't dropped any frames, guys. I don't know what you guys what in what sense is it lagging? Make sure you click on the live button in the YouTube, below, or in the middle of the page. Make sure it's red. If it's red, it should get the latest. Just doing that steady, but I don't think. Alright, it is a bit delayed. It's crazy technology. So yeah, Aussie is building up to be a very negative pair. That's going to cross over to the Aussie Kiwi. Aussie Kiwi may not get support in this current environment. So we could look at, this is actually a scenario where we might get that 103 test, even a parity test if a trade war breaks out in China. So I'm no longer very bullish here on the Aussie Kiwi. I'm going to be sitting back hoping we get down to the parity level. And, you know, we get that nice risk reward. So I'm no longer very bullish. Alright, I'm just checking it there. It seems okay. Alright, so let's keep an eye on this pair. This is you know, like a longer term trade. And while I'm very bullish on it, longer term, short term, I can understand us having just a little test lower as Aussie underperforms and the China risks remain. Alright, what else we got going on here? Pound Aussie, why are you not rallying? Alright, what is going on here? Let's just check that quickly. I'll tell you what, I'm going to move my stop on that pair. I do not want to be stopped out. I mean, moving stop to entry is pretty much a noob trap, right? It's a psychological ploy to make your trading a little bit more happy, but by no means does it make sense tactically. Alright, I don't want to be stopped out of this trade on a pullback from the Aussie. I want to see this continue, and I think we're going substantially lower on the Aussie against the US, while the pound's got a little bit of support on dips at these levels. So let's just see. Let's just see. Putting a stop to entry is just something you do, right, when you're not going to be watching the market, and it's by no means is having a stop here good. This is a buy zone for this pair right now. Dave West, what's the low? I can go lower than parity. In China, huge trade war with America, 95. That could happen. I mean, obviously Kiwi's going to get hit as well. It's just the speed of being hit. And maybe they really make Aussie the punching bag. Below parity's hard. Even parity's hard. Let's just not, you know, but, you know, markets always overshoot. So if it starts to develop ultra negatively, you got to start pricing that in. And if you're investing in that pair and you're not really trading it, you just want to buy the low of the decade, then be able to hold it to 95. Yeah, we don't have too much economic data this week. FXRAM is alluding to the UK statement. I don't even read that anywhere today. Any of the pre-updates. What is that? What is that statement you were alluding to there, mate? Autumn forecast from the BOE. And that's from the government, Treasury. Yeah, I don't think that's going to move the market too much. But okay, but in this particular case, right? They're sort of forecasting what the effect of the Brexit is. So yeah, maybe. Yeah, I didn't really think about it too closely. Yeah, it could be interesting. Interesting more than market moving. I don't think markets are too geared up for it. But let's see that particular outcome there. In terms of other data that's very important, Jesus, not much. FOMC meeting minutes. That's probably the biggest this week. The other things are a little bit second tier. That's always the case in the last week or second last week of the market of the month. US non-farms next week are pretty important too. What they're going to indicate, you know, they're the last ditch. If they're not going to raise rates in December, that number has to be terrible. So that's not too far away. That's only 10 days away, 10 trading days. But yeah, the market will start looking forward to that sort of stuff here because there isn't much here. Yeah, nothing data-wise, which is good. We might get cleaner trading. All right, just keeping an eye on the bonds, seeing if they can break higher. If they can't, then US dollar will come back. A little bit of selling coming through in the stock markets though. DAX is notable more than the US. If we break this support, that would be interesting. I'm guessing pound yen is hurting the pound. Quickly check that. As a bull, you don't want to see this. That's going to threaten this uptrend. Let's see how this plans out today. That bigger pullback in dollar yen would definitely threaten, 135-ish, 134, where it would be pretty good risk reward on the buy side. Alright, keep an eye on DAX here. If DAX breaks this level, I'm pretty sure that this is going to have a test. Bonds, remember, rally. Right, this is the bond market. It rallies when risk is off. So we have a couple of risk off days in the stocks. You're going to see the bond market give back. The bond market rally, giving back some of its losses. The yields giving back some of the gains. Bit early to say it's held. Rinko. Yeah, next week we'll be talking about this Italian referendum. So this week probably not so much. Alright, so there's plenty to be said by all the analysts over the weekend. Let's have a look at some of the reports put out. SocGen staying long dollar yen, short covering bounce, yada yada. Thanksgiving on Thursday, so US will be a little quieter than usual. So yeah, people have been talking a little bit about the the French elections. And they're all saying Le Pen has no chance. This is sort of dangerous talk, right? I mean, she's not polling that badly. And there has been talk about more. If you look at oil's being really well supported in the previous couple of days. Those rumors still bounding around that there's going to be an agreement. Now the market will be extremely disappointed if there is no agreement next week. And it would be most negative for the CAD and the NOK. The CAD hasn't rallied, right? The CAD hasn't rallied, and oil's rallied like 10%. This is pretty negative stuff for the CAD. I don't know about that Aussie CAD. That Aussie CAD is on a warpath, Nick. Aussie's really weak, mate. Aussie's like the weakest pair out there. I wouldn't be touching Aussie CAD yet. I mean, imagine if OPEC comes out with a deal. This is going to get ripped apart. Still got heaps of room to move to the low end. Next, you need a war between a trade war between America and China. You'll see how far this can fall. Where are we on the monthly? Nah, not too crazy. But yeah, lower 90s is definitely possible. That's a big candle, man. Big candles like that are rarely reversed. Rarely reversed. You might get a little bit of short-term reprieve, but that's usually the start of something. CAD's been given a pass by OPEC. I haven't checked his positions. What's his average entry? Steady capture. He laid into it, yeah? It was a big move on the daily. I mean, look, the Aussie's broken support, so obviously that's these two candles on the back of that. But CAD's also broken range too, and it didn't kick on. You need an OPEC meeting success like a kick in the nuts, man. You need a China trade war spat like a kick in the nuts. You need some good comments. China leader, President Ping talks to Trump. Plans to meet and forge new deal, something good. But I doubt we're going to get that early. We might get that later, much later. It's a bit too early for him to be chumming up to the Chinese. Man, I hope this is not the end of that US dollar sell-off. That was just not enough. Not enough. All right, what have Barclays got to say to us? The Euro Yen just hit a 90-day high, and they're suggesting to sell that. Let's have a little look at it. It makes sense if dollar yen's going to fall, but that's a big if, right? I mean, it broke out so nicely. I'd love to buy that on a dip towards its support. This is Lehman Brothers. See how much the dollar index changed. Still got some room to move. It will get up here if there's a big shock in the market too. Like a Chinese US trade war will help the US dollar. And stocks, emerging markets just get pummeled. I think we're going to have a lot of time to look at this politics of rage early next week. I think the market will be focused on it. we'll focus our attention when we get closer to the Italian referendum. I think that's on Saturday week. Alright, they're looking for US dollar to take a pause. Maybe the minutes might provide a little catalyst if they're not completely hawkish. I mean, basically when the market's 95%, they're going to raise rates. If it goes down to 85% or 80%, that's enough. So a lot of the bond markets in the world are selling off, but the Japanese aren't because the BOJ is still there. BOJ is still there. So there's definite lag going on in the Japanese bonds. That's half the reason why the yen is the weakest pair out there last week. Canadian dollar is actually impacted a little bit by Trump. That's half the reason the Canadian dollar is outperforming the Aussie. They suspect that Canada will get some sort of benefit from any main stimulus package over in the US. Look, it would be hurt by a protectionist policy, but I don't know. Maybe CAD would be hurt more than the Aussie in a big trade war. But I don't think they're looking. I don't think they've got a problem with Canada. I don't think I heard Trump say there's a problem with Canada the whole time. I don't think why you chuck Canada into the same thing. I think Aussie would be hurt much more than, just because we're the proxy for China. They've definitely got a problem with Mexico and China. Yeah, and maybe some of that volatility that's picked up because of Brexit and Trump winning will lead to some overflow into the European crisis. But I don't know. It's almost like the market is expecting Europe to fall apart because they see that populism's on the rise. Really, I mean, it may not be that crazy, right? We're using 2 data points and suggesting that the rest of the world's gone that way. It might be too early to be ultra negative on Europe. I mean, can't be much more negative than we are currently. Alright, that's enough of that. Has it held? Did the DAX hold again? Has the US dollar buying come back already? Oh God. We didn't get far, did we? Alright, so these are the 4 charts I'd be watching pretty closely right now if I was in the market. Alright guys, I'm going to be back tomorrow at 9 GMT. I'll leave you with a little video that I found hilarious from the Huffington Post.
Let's say China. 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 You go over to China, 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 China. You take China.
China.
China. I love them. China. China. China, China, China. I have to have my China. China, China, because China, 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 China. China, 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 China now, China, China. You know, China.
I know China very well. China, 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 China.
China, China, China.
Northwest Wisconsin, where I'm from.
It's China to me, China. China, 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 China. You want to buy from China? That's great. Buy from China. Buy toys from China. China in particular. China. China. I have people that I know in China. 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 China, 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 China. I've been saying China, 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 China.
Let me ask you about China.
China. I go to China. China, 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 China. People from China, they love me. China. China, 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 China. In China, they say I don't like China. I love China. People think I don't like China. I love China. China. China is the new China, by the way. China. 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 I deal with China. 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 Big league. China. So don't tell me about China. I know China. China.
China, 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 China. Whether it's China, China. So if you went to China and you wanted to get a job in China,
I don't knock China. How could I dislike China? The man from China. China. You have China. Carl, take China. 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 China, 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 China. China's over here. Look at what China's doing. They're learning from China. China, China, okay?
look at that. Isn't that nice? China, China, China,
China. China, 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 China. And by the way, I love China. I mean, I love China. How can you not love China? I love China. China, China. China, 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 China. And you know China, 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 South China, China, China. People say, oh, you don't like China. I like China. China. I love China. China. China all the time. China. When was the last time you heard China?